Hi traders, Nick Shaheen here. MarketFi create income with option spreads. Recapping for Benziga, the week ending 7-3 or 4, and probably looking into next week and see what's going on. Actually, going forward, not just next week. Bullish week, definitely. And by the way, if you need to get a hold of me, you can message me through MarketFi website. It's really easy to do so. If not, you can also email me at sellspreads@gmail.com. As far as week, we all expected fireworks today. I somewhat thought we were going to fizzle, and by fizzle I meant it was a fizzle relative to what happened a few days ago when it seemed like we were shooting to the moon. So given the great news that we got today, we should have at least matched that other day. So yes, bullish week, but I have a big question mark, but dot dot dot, and I'm sure bears will come up with 100 different things to say after the but. For me, it basically, I will say that my global thesis is still in play, meaning I'm not convinced that we're off to the races yet. Yes, we are bullish. I'm not saying we're going to drop 10%, but that's part of my global thesis. We're not off to the races either. I just don't buy it yet. What does that mean? I've heard a few people say this and that over the course of the week, and I think the best statement sounds to me every time: grind. We're going to grind higher, slip back a little bit, grind higher, slip back a little bit, which is what we've been doing, which is great for credit spreads. People say, well, premiums are low, there's no volatility. That's great. In credit spreads world, I want nothing to happen, and that's conducive to that. So what do I do? What do I do into next week? First of all, I'll run through this week, but also in general, what do I want to do for next week? We're coming into earnings, so I usually don't do credit spreads and earnings, and I also never advocate taking full positions ahead of earnings. Why? Because you never know. Like I always say, it sounds repetitive, but it's totally true. It's Vegas. I can have the P&L ahead of time in my hands. I can read through it and know that they blew away the numbers in a good way. And I still could get it wrong. It's still a 50-50 shot. I don't know how the market is going to react to it. I don't know if somebody's going to say something wrong in the conference call afterwards. You never know the reaction. So it's not the numbers that I'm worried about as much as the reaction to the numbers. That's what makes it a coin flip. It's really 50-50, and I don't invest on 50-50. So I take positions into earnings, but they're all lotto based, meaning I spend a few $100s, I pick a decision, I pick away, and I live with the outcome. I never lay on, okay, I'm going long Apple for the next 6 years, and I lay in a big fat one right before the earnings. I just can't do that. Okay, why not wait until after the earnings? So if I miss a few points, that's fine. If I want to participate on the upside in Apple, I'll buy a few calls, and if it pops on the open, then hey, I got some money. I can still jump in and ride it up. But what if it drops $100? Well, not at this level. Divided by 7. So you see my point. Earnings are a coin flip. So what do? I start building positions. You can do calendars. So sell some spreads for this week in order to finance some put or call positions for the earnings. So if I want to go long in Apple, I start generating income in Apple now using the period before it by doing either iron condors or credit put spreads. And then with the money I collect, I can buy some long positions to cover the earnings. So and same for Google, which actually comes before Apple, and for July positions. So I can use next week to sell maybe an iron condor in Google, plus or minus 20 points from here, as long as I can keep it on a short leash. And actually, why don't I pull it up? And we can talk about it face to face. Let's see here. This might serve us well. We're talking about the Goog. All right, this is the Goog, not the Goog L. So for next week, if I wanted to, I can sell some spreads that are plus or minus 20 points from where it closed. And I can do a credit call spread and mirror it with a credit put spread, same amount of margin required because only one can lose at a time, generate some income. With that money, I can buy whatever position I want to take on Google, bullish, bearish, buy put spread, buy straight up puts, buy a lotto, way cheap puts or calls and hope for a move, a big move. So I can do that. That's the point of building in a position into the earnings. And the position is going to be limited. And obviously, I'm not going to go crazy trying to finance that in case I'm wrong and then I'm in the hole before the earnings come. So just make it hedged and keep it on a short leash. So if it gets out of hand, you unwind the whole thing for minimal damage. That's what I usually do. So let's look back at the week actually in pictures. So I think this will give us, all right, here we have the ES, the S&P basically, and the chug, that's for the week. Chug is higher. It's somewhat a contained, it's not a rip, but it's somewhat contained. I mean, this is a chug. And Apple surprised me this week, totally surprised me. I did not expect it. The open interest did not expect it. It suggested a magnet towards 92, and I took some puts in 93. Obviously, they were worthless, but it was just a few pennies. It was just a long shot lotto for me, and it was my lotto ticket, and it didn't work. No big deal. The Qs, again, chug. Again, the range is pretty well behaved. So the one that worries me the most are the small caps. This is the Russell, the TF. And the reason why the range is broadening and it's an ascending, and sometimes these break to the downside. I know some people expect a huge move up. It could happen. But if I was a gambling guy at all-time highs, I'd gamble lower rather than higher, unless we get a new catalyst, and I just don't know where we get the catalyst. So let's expand time-wise to see if I can see a better pattern. No, I thought I did earlier. Maybe I was looking at some other. Anyway, so they did try to sell off within the last couple of weeks, but then they recovered to almost all-time highs. I think this was the all-time high on the cash, the mini, way back in March, and it almost kissed it. And then it dropped down, and today it recovered a little bit, but still on bullish days I expect the small caps to outperform the broader markets. Today they didn't, so that worries me a little bit. I think they were in step with it. The VIX was clobbered today, and to the tune that's higher than what I expect on a plus 0.5% day. So down back to 10.3. That's pretty darn low. Like I always say, it leaves no room to be wrong. So let's pick up 1 year. That's pretty low. So just caution is warranted, and there are no signs of complete breakout that I see. That you can explain it via technicals, patterns, ABC, crab patterns, all kinds of stuff. But I still think we need a big catalyst to the upside. Today's jobs report tells us that the economy is doing a lot better than we thought. They revised last month to over 300,000, this month 288. So we are creating jobs. Right jobs, wrong jobs, I don't care. We are creating jobs. Inflation is getting higher, although Yellen tells us that we shouldn't worry about it, and that worries me a little bit. I have no faith in Yellen right now. And I think the rates will go up. Today, the 10-year, the last couple of days popped, and no one's paying attention. Rates. And so last time that happened, I think last year, we all freaked out. So I think we're going to pay attention to it. When, I don't know. So meanwhile, I want to know next week, is the stalemate going to continue? Meaning a couple of days winning for the Bulls, a couple of days for the Bears, so we meander. If that's the case, then I want to continue selling iron condors and collect some income while I'm waiting for the market direction. I have to stay nimble. I don't play the weeklies so tightly to where it moves against me, boom, I'm wiped out. So anything I do, I hedge. Today I did a couple of trades. I hedged them. They're very small. I just want to participate. Here's the thing. I can't lay out big fat shorts right here and fight the tape and fight the Fed and fight the sentiment, but I have to short a little bit. And I can't go full long because I would be such a weak hand. I have no conviction from these all-time highs. So I'm kind of like stuck in no man's land. Hopefully next week will give me better direction. So what's the plan of attack? If you're too short, you have to hedge. Don't get too short right now. If you're too long, you have to book some profits, and don't get too long right now. Sounds sane, but a lot of people are doing the opposite. Don't get emotional. My instinct is to short everything. Everywhere I look, I see short opportunities. My sanity tells me don't short everything, and if you do, make it out in time, give yourself some room. Don't build it so close that something happens 2, 3 days in a row, boom, you're underwater. So meanwhile, I can also pick on some weak stocks. I'm picking on Tesla. I took a short position in Tesla, and it turned out into a complicated position that was cost neutral to me, but I want Tesla to move from here, and I have the chance to make some money on quick scalps. So pick on a weak one. Today Tesla was red. Yesterday was really red, I think, and so I'm going to pick on it until it shows me anything different. It's at highs, and it's trying to go to highs, and I don't know if it's going to be able to. I also picked on CMG. I was in the green for a while, the while being right here, and then it actually, no, sorry about that. That's too long of a time frame. I picked on it when it was at the highs, and then it dropped down. I didn't cash it in. It was dropped down. I didn't cash it in. So now I'm in, let me see, a little bit red, but I still have times to July position, and I'm not folding on it right now. If I do feel like it's kicking me in the fanny, what I'll do is just sell some spreads to put it to work a little bit and recoup some money and probably get out of it even. But until then, I'm not too. Again, it wasn't a full-blown position. It was just something that I can participate a little bit. I am tempted to short everything. I mean, everywhere I look, my watch list has short this note, short that note, short this note, but I'm going to resist. I'm going to short sparingly and give myself some time to be wrong, and some room to be wrong, I should say. So this is what's going on in the big picture. On the small side, I looked at a few tickers, made a few notes, and I'm looking at Trip, C Trip, and Priceline, trying to see if I can game. I wanted to game the earnings via Lotto, of course. So I went ahead and mapped out the earnings for all of these guys. And before you trade any earnings or before you lay out any big position, I always say when you do your watch list, you got to look at the sympathy moves. So if I'm looking to trade MasterCard, I'll be sure to know when American Express, Visa, and eBay are reporting because they will affect it. And by the way, those report pretty soon. 716 eBay, 724 Visa, 729 American Express, and MasterCard. The latest is 731. So if I want to trade eBay or if I want to trade Visa earnings, I can play via MasterCard, so it'll be somewhat diffused if I want to. Also, I can look at Goldman Sachs, Morgan Stanley, and JP Morgan. They report even before that. I think a day 715, 715, 717, and Bank of America 716. So obviously the financials are going to start reporting. So I'm not going to lay any full positions in Visa and MasterCard. Google and Apple. Apple is confirmed on 722, so I can still play the July contract without having to worry about the earnings. And so I make sure to close it out before the earnings too. And Google's earnings are likely to fall in July, so I can't play the July contract and leave it open. Priceline, I'm not sure, sometime in August. So you got to think ahead, and you can't just jump into positions. So I was tempted to short Buffalo, Trip, and Wells. I haven't done any of these. I go through my watch list. I'm really tempted at shorting a whole bunch of stuff, but instead I just threw a blanket short to the a couple of indices, and I definitely left some room to be wrong. So don't be too stubborn with that. Let me see if I can show something here. Okay, so let's look at patterns. People talk about patterns. The SPY. I don't like patterns that are looking like this. Even though it peaked above the trend, you can argue both ways. But at all-time highs, does it have enough to break out from here? I'm not sure. Is it better visibly on the SPX? Okay, the SPX shows it a little better picture. How about the IWM? I said I was concerned about it. I mean, this is a well-defined range. It's very steep. It's almost like a V. And I don't see too many V recoveries like this one. Today's candle, it touched the upper end, but then dropped back down. It did that here and here, not to the same extent though. This was a giant candle. So next week, like I said, is going to be telling. Is it time to start going sideways a little bit and then back down, or is it really going to keep this going up? I don't know. We'll find out next week. We'll get a little more hints. Is it better to see it? No, same picture on the RUT. I talked about Apple and I said it surprised me this week. If unless they deliver a flying car, I'd be very leery of getting in big longs right here. The company's great. I love the business of it. I don't like their products. They're not for me. They're excellent products, but they're not for me. And the company's has a rosy future. Whether it has another, plus 20% from here, I'm not sure. And I'm patient. I loved it when everybody hated it down from 700. I think that was 2 years ago, almost. Okay, everybody loved it up here. They were buying it, gave us a big doji. This is weekly, 2 years, and then collapsed, right? I kind of liked it here and did some credit put spreads and made some money, but then I loved it down here, and I said, this is it. It's $390. I'm going full in, and I did a huge credit put spread at 350, and obviously expired worthless for maximum gain. And then everybody hated it all the way down here, and then now they love it again way back up here. So I'm less likely to love it up here. I'll wait until everybody hates it again some point in time, and if I miss it, I miss it. No big deal. So anyway, stay nimble is the point. We have a great long weekend ahead of us here, so try to enjoy it. I'm going to age a year over the weekend, so I'll be older on Monday, and I'm going to enjoy the weekend as best as I can. There's nothing that can be done after hours. I was talking to a friend of mine who had a pickle on his hand with one of his positions that was going bad, as a recommendation from somebody else, and we're trying to work a solution for it. But it's hard to divest yourself from thinking about what's on your portfolio. But if you can, occupy your mind with other stuff that you like. If you like racing, go out and race. If you like working out, go out and work out. If you like playing cards, do so. Some crosswords, whatever keeps your mind off of your problem, do it. Life's too short, and we should enjoy ourselves a little bit. It's not all about money. The stock market is fun and a good way to accumulate wealth, but it's also it can be a headache. Try to not let it dictate your life. Nothing to be done before Monday, so we'll circle around on Monday. Members, you expect the pre-open newsletter that has all the new levels. Remember that all the levels I give you are only good for the week, and I update them daily, so they change from day to day. They're never a 2 months out in time type of a level. So you will get them on Monday, and if you have any questions, you know where to reach me. Nick Shaheen, Create Income with Option Spread.